treat your staff how you want to be treated yourself, to always have that lens. And if you do that, everything else will fall into place. And then when I look at the corporate world, other people I work for, the people that didn't treat you the way that you would like to be treated yourself, or they would have probably liked to be treated, the outcomes were very different, and you never got the best out of people. And so I like to take the view, you know, people go through tough times and people go through whatever events in their life, and sometimes you just have to support them.
Welcome to another episode of Ways to Wealth. Today I have Marc with me. How about you introduce yourself, give us the too long didn't read on who you are and how you got to be where you're at today and what you're doing.
I'm a chartered accountant and also a financial advisor. I operate two businesses that provide those services. Started out in 1988, which is actually quite a scary thought, with an internship at Coopers Lybrand, as they were in those days, down in Palmerston North.
Okay.
I just qualified with an accounting degree from London, came back to New Zealand and worked for Coopers Lybrand, then PricewaterhouseCoopers, worked as an audit manager. Then we progressed into the financial advice business. We helped set up the financial advice business in Palmerston North.
Oh, cool.
I then decided that life in Palmerston North was maybe not quite for me, having grown up in the UK and spent some time in London. I wanted to come up to a bigger city, so we moved to Auckland. Then moved to work for Westpac, had a number of roles there, and then got made redundant from Westpac, which was quite just one of those events that happened just prior to, or literally right on COVID.
Oh, okay.
It turned out to be the life-changing event that I needed, because it gave me the kickstart to actually go and do my own thing.
Oh, nice.
And Greta's my wife, who's put up with me for 22 years now. We decided it was time to start our own business, and we bought a book of accounting fees.
Oh, wicked.
And run our accounting practice and have built a financial advice business out of that.
That's really cool. You really had quite a long career in larger corporate roles.
Well, I had just under 20 years at Westpac, so I saw the best and the worst of corporate world.
And did you like that was the catalyst? And I often ask around, was there a catalyst that got you going in the business? And obviously that was it. But were you kind of toying with the idea for a while before, or?
Probably I'd been thinking about it for 3 or 4 years. Yeah. And I kind of knew what I wanted to do, and then got wind of the fact I was going to get made redundant and put some plans in place. And it was the kick I needed, because, one of the things of working in a corporate is you can become very comfortable. Yeah. And and I just decided it just wasn't for me anymore. And I wanted to be my own boss. I wanted to do my own thing. Yeah. And just.
I can relate, having done it now for over 10 years myself.
Yeah. So it's invigorating, I've never worked as hard in my life as I am now, but I probably earn less than I did. But I get so much more personal satisfaction and reward out of what I do.
No, totally. You've got that level of control.
Yep. Well, the thing is, if you're working at 9 o'clock on a Friday night, it's for you. And if you decide to take half a day off on a Wednesday because the sun's shining outside and you want to go and do something else, well, so be it. That's on you as well, because you're going to have to make up that time at some point in the future.
Totally. And have you kept it, what's the strategy with the team? You bought a book and then you and Greta focused on it on your own to begin with?
No, we inherited some staff.
Oh, okay.
Part of the takeover. We still got 2 of those people still with us.
Okay.
Actually, 3 of them. Sorry, 3 people are still with us. One's actually moved offshore, but we've retained him as an employee or as a contractor, because it's it worked for us, it works for him, and it also ironically it's actually giving us quite a good advantage. It's given me an insight into maybe just approaching things in a slightly different way. Because when he originally told me he was going to leave, I thought, okay, this is going to create a hassle. And one thing I learned over my time in the corporates is you never try and talk someone out of leaving, because they'll ultimately leave anyway. But I thought about, there's actually another solution here. And what we've actually ended up with is he's based in Western Australia, but it gives us the ability that, if something urgent comes in at 4:30, 5 o'clock at night, I can pick up the phone, give him a call, and
he can take it.
He can pick it up. And then when I log on in the morning, it's in my inbox ready to go. Yeah. So it's really is giving us some big advantages.
Yeah, for sure. We, the first business I ran was, the second business I ran where I actually had staff was a gaming business, and remote from 2016. So we built the business remotely instantly, and it was amazing to have a number of different time zones so you can work around the clock, especially for us in that case, because we were basically 24/7 because it was an international gaming platform. Yeah. So we had 450,000 users. Some of our business times was when I was sleeping, naturally. Yeah. guys in Argentina and the UK and all over the place. It does give you an advantage. And I've taken that through to Acuity. We have someone in the UK and we have someone in Chicago.
Yeah.
So
you're covering the 24-hour day.
That's right. And they have different functions in the business, but it's just about productivity all the time as well.
It does also create a challenge in thinking, because we have business partners we use who are based in Chicago, and I've got to connect them with people that are 12-hour time zone different, and you're thinking, well, actually, how do you do that? And, but technology has advanced so far these days that anything is actually possible. So.
Yeah, for sure. So when you guys bought the book, like, what was the thought process when you bought the book? Like, did you have an outcome in mind?
I'd always had a view that accounting and financial advice fit well together.
Yeah.
And I knew that if I looked at myself as a financial advisor, I thought, where do my referrals come from? They come from accountants normally. And I thought, I could do both.
Yeah.
And I enjoy doing both because at the end of the day, they're about people. They're about helping people. They're about giving them guidance through life. They're about, helping people achieve their goals, whatever those goals might be.
Yeah.
It's also about that you have people that go through tough times and, being prepared to give them the time that they need to help them through those tough times as well, because there's a bit of both, and I have a bit of an altruistic streak in me too. I do like helping people, and to me they both dovetail together really well. And that's what has proven to be the case.
And was the book both, or did you introduce the financial advice side?
Financial advice because one of the things in New Zealand is that you can't operate financial advice and accounting out of the same entity because of the regulation. And so the financial advice side is regulated by the FMA and the accounting side is regulated by the chartered accountants. So you've actually got to be very disciplined about how you keep them separate too.
Right, yeah.
But we've got our processes to do that, and but they've worked very well and they work in synergy with each other. So,
that's cool. And I guess during your time in the corporate world, like, what were the best lessons that you got, or what was the edge you gained from having all of that experience when you then went and bought the book?
I had a boss who, I look back on all the people I worked for, and as you go through life, there are people that make a mark on you. And if I think through the people that have made a significant mark on me, there was a guy, I spent 18 months at Palmerston North Boys High School when my parents moved from the UK and came to New Zealand. It didn't work out when we went back to the UK, but there was a deputy rector there, a guy called Errol Brookie, who he was an incredible man, very old school disciplinarian, but he had this thing where he really wanted to help people.
Right.
And that just really rubbed off on me. And he, for whatever reason, he could see I was a bit of a lost soul, right? Because my father had left and my mother was raising us as a solo mum, and it was bloody tough on her. But he took me under his wing and just gave me that little bit of guidance that perhaps I needed at that time. Then when I started off in Palmerston North, I had a really good boss at Coopers Lybrand who I still keep in contact with today. And then when I was at Westpac, there was a guy I worked for there who he once again was he just gave leadership. And when I put the three of them together, it was the things I took out of them is treat your staff how you want to be treated yourself.
Totally.
So always have that lens. And if you do that, everything else will fall into place. And then when I look at the corporate world that other people I work for, the people that didn't treat you the way that you would like to be treated yourself, or they would have probably liked to be treated, the outcomes were very different and you never got the best out of people. And so I take the view, people go through tough times and people go through, whatever events in their life, and sometimes you just have to support them.
Yeah, totally. Yeah, you got to have that human touch.
So that's probably my big takeout that I've had from the corporate world.
Was to treat your staff really well.
Yeah, and that's what we try to do where we are now. And, we also put that into our clients' shoes as well, that we try and walk in their shoes when we're doing stuff and think about, well, how are they feeling? What kind of thought process are they going through? And it's been quite interesting because you can take the banking industry taught me a lot about, it's actually interesting being on the other side of the fence.
Right.
Because banks are quite often seen as blockers to business. And it's quite interesting seeing why they block business, but they're actually doing it for the right reasons.
Okay.
But being able to apply that thought process to how we put information together actually helps and gets a good outcome for both. And that's sort of one of the things.
If you know how they think and why they think and why they do, then you have an edge in how you prepare your material.
Well, it's a bit like that, but it also means that, the credit manager in the bank is a very particular particular type of animal.
Totally.
And if you got an insight to the mindset and how they would want information set out, it helps your clients with how they, maybe need to present stuff to the banks.
Yeah, totally. That makes sense. That gives it a nice edge. And how have you found working with Greta in this?
It's had its moments, when you work with your wife, and, we do try and have a bit of differentiation between work and home. But, we do probably go, even though we can work from home, and I am today, I try and avoid working from home where I can, just simply because I think it's good to have that differentiation between work and home. Yep. But, just with sometimes it can't be helped because you've got to do stuff in the evenings and you just got to catch up, and, and then we try and have days where she'll work from home and I'll work from home. So, and she'll go to the office and I'll stay at home, kind of thing. So, it's been good. And she's been, she's a real driving force in the business, and she's done some incredible work around, just process, because one of the things is, right, when you're in sales, you've got to admit that, not sales, but people, sometimes attention to process isn't quite
totally.
You always sort of think about, I'd actually rather talk to that person than sit here and write a policy. Whereas Greta likes writing policies. She likes putting process in place. She's very, very good at doing all that stuff. And she's very good at doing the automations and
nice.
And she's been really busy implementing technology into our lives.
Oh, nice.
So, a bit of AI, a bit of, we've just introduced a new document management system, which has really helped us in terms of making sure that processes run smoothly.
Yeah.
But it's also about having very clear differentiation between what your roles are. And so we sort of decided, probably much to Greta's dismay, I started referring to her as the boss. And I actually, I rather she runs the place, because she's there all the time and she can see what's going on. Yeah. Whereas for me, I'm out. I generally like to go out and meet clients.
Right.
So I like building the book. I'm on the phone. Well, I don't like sitting behind a computer all day. I actually like,
the human side.
If someone wants to see me, I try and do face-to-face meetings. And I prefer to do them in their environment than my environment.
Okay.
So it means that I'm out of the office a lot more than in the office, and therefore you actually still got to have that person in the office to make sure things function. Totally. And Greta's really good at just making sure things happen. She's very good at process. She's very good at making sure that, if a job's got to be done today, that making sure the milestones are hit to make sure it actually happens.
Oh, nice. Perfect. That seems complementary to...
It is. And that's where I think it comes down to is defining what she's good at and what I'm good at, and then trying not to mix the two together.
Yeah, that's right. That's really cool. So let's move on a moment then to, one of the difficult things I think that a lot of people are dealing with in New Zealand, specifically right now, businesses and households. So I know from a business perspective, obviously, because we run business and we have a number of businesses in our portfolio, but also from our experience running financial wellbeing programs with employers, the amount of people struggling with it from a cash flow perspective right now is at kind of, I would say, an all-time high. So I thought it would be kind of cool that we could kind of have a little bit of time where we talk a bit about kind of cash flow management, both from, I think the fundamentals are pretty much the same from a household and a business. And I think that it's a bit of a mistake to even kind of try and differentiate them. I actually often, when we meet with these people that we're doing the financial wellbeing consultations with, which is really just cash flow management at a basic level and goal setting, is that you should treat your household like a business. You should have a balance sheet. You should have your cash flow. You should be tracking your net worth, making sure that you're earning more than you spend, and then look at the consequences of paying down debt quicker, or making different investment decisions as you get windfalls of cash, perhaps. So where do you think the good place to start in that regard is then?
I think you've actually just hit the nail on the head with what you said. And the first question I always ask people is, are you a spender or a saver? Because people are one or the other, and depending on what the answer is will give you the strategy they need to follow. Because a lot of people will say they're spenders when in fact they're savers, and a lot of people who are spenders will try and say they're a saver because they don't want to admit they're a spender. Yeah. And it's actually really important, because people are good with money and they're savers. They'll always make sure that things are put away for what they need. And generally cash flow is not normally an issue. Right. Or and then for them, the cash flow conversation becomes about how do you actually better use your money? Yeah. How do you better invest it? How do you allocate it? And then, how do you use your resources to increase your wealth? Yeah. For the spenders, it's a very, very different conversation, because, if they're a spender and they're in business, they're probably going to be behind with the IRD. They're probably going to be, behind with their creditors. They're probably going to be behind with, their records, all that sort of stuff, because, they'll see that they've got $5,000 sitting in their bank account and next day it will be gone, right? And a homeowner's the same. A lot of people will set themselves up because they read the books that say that you should have your fixed rate mortgages, you you have a revolving credit,
Yeah.
you have your credit card, you pay your credit card off every month. But if they're a spender, you know for sure that 6 months later, their revolving credit will be maxed out, the credit card will be maxed out, and there'll be no savings because they spend the money. So if I get the answer, we think about an individual, if I get an answer for that, I will generally tell them to terminate their revolving credit, and literally you put money in a separate bank account that you've got to make a conscious decision to touch, because otherwise it just all gets spent.
Too easy.
It's just too easy. Yeah.
Totally agree with that. When I first got into my investing journey, after I'd sold my gaming business, I just was relentless about putting money into my brokerage account at the time. And in my head, it was gone because it was never coming out, as a way to basically force save without, making it easy. Like you say, the ease of getting to it can sometimes...
It's actually a very interesting observation. And, I look at myself and I think, well, what have been my smartest financial decisions I've made? They weren't buying property. They weren't buying the business.
Right.
My two smartest financial decisions I made, one was joining superannuation when I joined the corporate world.
Right, yeah, of course.
And so every payday, I made the decision to put 12% away of my salary right from day one.
Wow.
And so I never missed that. And then when I left, I got this money. I thought, wow, that's not bad.
Yeah, 12%'s really good.
And then with KiwiSaver,
4 times what you would do for KiwiSaver.
Yeah, well, it's actually not. So with KiwiSaver, we do through work. I encourage everyone to do this, and I do it through work as well. As we put in the employer contribution, but then we do 10% ourselves.
Oh, you do?
So we're actually getting the full Monty. And what that means is that money's locked away. You never do it. And every now and again, it's quite funny. Greta will sit down and she'll bring a KiwiSaver up and show me. And she gets really excited because suddenly it's gone up by
X%.
And I look at mine and I look at that money again and I think, you know what, I would have never been able to save that if it was available to you. If it was available, because I am a spender and Greta's a spender. I mean, she owns 300 pairs of shoes. So she doesn't have any expensive shoes, but she still owns 300 pairs of shoes, and she is a bit of a spender in that regard. But yet we've still got the KiwiSaver, and we've got we also run a share fund where we put a little bit of money in every week, and it's just a discipline that we have. That the first thing that happens when we get paid is that's where the money goes.
Yeah, totally. Yeah,
and it's about putting it out of reach. And I've got a friend of mine who was an absolute compulsive spender. And I said to him one day, I said, mate, when you go and buy a coffee, and this was when Sharesies was just starting out, and I said, mate, when you go and buy a coffee, put the same amount of money in Sharesies, but buy Starbucks. When you want to buy, go and buy fast food, go and put it into McDonald's, And I got him to do this. And I caught up with him probably a couple of years later, and I said, how's that little share portfolio? He said, you're not going to believe it, it's worth over 30 grand now.
Wow.
And that was because he was doing the equivalent amount into...
But he'd have got dividends and he'd have got any appreciation.
And then I think it then gave him an
aha moment. Yeah,
of what he was spending. And it was, and I've talked to quite a few clients about doing something similar to that. And it does work. Yeah. Because it also creates a penalty for spending. So that's the sort of thing. And then if you apply it into a business context, it comes down to the same thing. If you're a spender or you run a business that needs to manage cash flow, put money aside into an account for those big expenses, like your annual insurance premium, like those one-off big bills that come once a year, so that when they come, it's not impossible to manage them. I always say to people, if you are, once again, if you're in that category, put a third of your income into a tax account. It's purely there to pay your GST and pay your end of year tax, because that way the money's always there and it's always available when you do it. And then for a business, it's about actually managing your cash flow. Making sure that what you're paying out is right. Making sure, because don't trust your suppliers to give you the right invoices. Don't trust them. Don't pay off statements, because quite often they won't reconcile something properly. They won't. So we run in our business. We run invoices through 2 different systems to make sure we're picking up duplicates, and then we pay off invoice, because it gives you the control that you're paying off what's actually been supplied, or and so that we find that works really well. And we've picked up a number of cases now where statements have come out that were previously on direct debit.
Right. Yeah.
That when you actually look at them, you think, hang on a minute, that's not actually right.
Right. Nice.
And so there's that side of it. So it's about making sure that you're keeping an eye on what's going out the door. I have probably my number one pet hate is direct debits.
Yeah.
I just encourage anyone in a personal situation or in a business, just do not do them.
Yeah, for sure.
Because it's giving control it gives control to the supplier to empty your bank account. Yeah. And it gives them control over your cash flow. Yeah. And, when I was in the bank, and sorry, I'm jumping between personal and
that's fine.
there was that era when you used to see the those trucks that used to go around and prey on people that didn't actually have money, and they used to get them to sign up to buy clothing or whiteware over
like a period of time.
Yeah, correct.
Like a payment plan.
Yeah, and they would just get them to sign multiple direct debits, and then of course when they fail, they'll just go to the bank and get another one loaded.
Yeah,
and so you see these people that are just stuck in a cycle where people are taking money out of their bank account, they've got no control over it.
Which is like buy now, pay later now.
Correct. Yeah, it is the same as Afterpay now.
Yeah,
and it just. I think you've got to have control over your own cash.
Yeah.
You know? Take responsibility for what you're, make sure you understand what's actually going out of your bank account. Because if you don't, you can't control your cash flow.
Yeah, I just kill our cards every year as well.
Yeah.
Just because when you've got kids and you use a lot of technology, you end up with subscriptions that you don't want necessarily.
Yeah, correct.
And you'll know if you need it because you'll get annoyed when you can't access it if it does get cut off.
Yeah. Well, that's exactly the point. That if you've ever tried to cancel a direct debit, it's almost impossible.
Yeah. Because
you'll ring the bank and say cancel it, and the bank will say, well, you've got to contact your supplier, and then you're ringing someone like Netflix or Sky TV, and it takes them months. I mean, my mum, she cancelled a Sky TV in November last year. It took Sky until May this year to actually cancel a direct debit and refund her money.
Yeah. Well, I mean, Sky as well. It's like, if you look at the numbers, it's so much more expensive, right? And I heard that there's a company, I won't name them because I don't want to, that has, basically they've got their legacy platform and they got a new platform that they had acquired. And now they're in the process of switching over, but they're grandfathering the old pricing structure, I've heard, even though they're going on the new low cost, which I found typical, but also a great opportunity potentially for people that want to then explain that that's happening and then be able to win some business. But I thought that was a wrong strategical move because if the more people that realize that, the brand impact could be pretty bad.
I think you've hit the nail on the head with your comment about credit cards. Is that I do like the subscription model, but the subscription model can create problems as well. You can actually steal your idea about killing your card once a year.
Yeah,
but the other thing I do personally is I have a card on Wise. I don't know if I'm supposed to mention.
love Wise.
But I have a card on Wise, and they enable you to have virtual cards. Yeah, which is what I use when I want to just try something.
Smart.
That way you use the virtual card, and then if you don't want it, you just kill the card. And it's the easiest way of then cancelling the subscription.
Oh, that's nice. Yeah. No, Wise is a great product.
It's a fantastic product.
We use them for certain parts of our business.
It's actually scary how, if you think about the legacy banks in New Zealand, I don't actually think they don't see companies like Wise as a threat.
Yeah, I find it funny.
And if you think about companies like Wise, Google, Apple, they now have their own payments platform. Yeah. It's not a fast step now for them to actually offer full banking services.
No, even when I think about what we're just about to launch, we're in the final testing stages of it. But, over the next couple of days, we'll be launching a 3.9% USD savings account on just all cash kept in our broker.
Yeah. And that's the thing that,
how are they going to be able to compete with this?
Well, they won't, because it cuts margins. And, I do think that the banking sector is open for massive disruption. And ironically, the other two sectors I think they're open for massive disruption are the two that I operate in, which is accounting and financial advice. So,
I think fund managers, are in a real interesting place of being disrupted to a certain degree.
The broking industry.
Well, the broking industry has also been disrupted, right?
It has, but they're still charging phenomenal fees.
Only here.
Yeah, in New Zealand they are. I think the fees that are being charged, I cannot see how they can justify the fees they're charging.
I know the cost because we run a brokerage.
Yeah.
If you're doing big lots, it kind of, the cost to do those trades are kind of get higher. But even then, when I came into the industry and I was working out, I did the math and I was like, okay, a traditional broker, if you've got $1 million with a traditional broker, you're literally going to pay them $550K over 20 years. Whereas with us, you're paying maybe $30K.
Well, I just did a calculation for a trust I'm involved in, and they're being charged by their broker a fee, and the broker recommended a fund, and I worked out the fee difference between that and another fund, which offers exactly the same thing. It's just not based in New Zealand. Yeah, was over 10 grand over 5 years. Yeah. And I just, and that's where I think the model has to change, because, if you look at ETFs in New Zealand as an example, they'll charge you 40, 50 basis points. And yet if you actually scratch just the surface off, you can buy that same ETF
at 9 basis points
or 9 or 4 on the US.
Yeah.
And so that's what I do for my clients is we will buy the ETF offshore because you're getting exactly the same thing.
Yeah, I know. I just saw this, I won't name the ETF provider, but I think there's only one probably in New Zealand. 75 basis points. I mean, there are also fun, like, I think this, like, for example, PI, that a lot of the fund managers, they talk about the PI structure. And I'm like, guys, you're all tracking the S&P 500. How much dividends are we getting? Like none or close to none?
Well, I mean, the interesting thing with PIs is they do have, interestingly, since the government changed the tax rate on trusts, they do actually have a place now.
Right.
But up to this point, I've never been a big user of PIs because, a PI, you pay tax every year, but a market cycle means you are going to get years where you have negatives and you're actually going to pay little tax.
Right.
So it's about just really thinking through the consequences of, and PIs in New Zealand are very oversold.
Yeah, that's what I meant. It's like a promoting tool.
They're promoted very heavily.
But if you use it as if you actually look at it from first principles, you go, well, I get that it's a marketing tool, but it is, I would say, predominantly a marketing tool rather than this bastion of kind of efficiency. Well, I mean, I think it's always good to try to disintermediate where you can. So I think like it's what I've observed is you've got the entry level brokers, very cost effective, but it's like, here's a fishing rod, good luck. And then you've got the traditional guys in the managed funds. Yeah, like you say, perhaps wrapping products that are essentially something you can get for next to nothing in quite expensive